Welcome to ForexTV.com's PM Exchange. It's Tuesday, March 4th. I'm Remy Hoki. Today I'm joined by Greg Michalowski, Vice President of Trading and Liquidity at FXDD. Good afternoon, Greg.
Good afternoon, Remy.
Thanks for joining us today.
My pleasure.
Well, in today's session, we're seeing continued volatility across all markets. U.S. equities are back down in negative territory on the heels of more bad news from the financial sector as well as the tech sector. And with risk aversion up on the heels of Bernanke's home foreclosure comments, we're seeing the yen strengthen against the dollar. So in the near term, if you could give us your yen forecast.
Right, the dollar yen was, it did go down a little bit today in reaction to the comments. This afternoon it started to rebound a little bit. We hit a key level, or there was an option barrier at the 102.50 level that held, and toward the end of the day we saw a little bit rebound in the stock market, and we saw the dollar yen likewise rise up more to over the 103 level. So it sort of held the support level like it was supposed to do, and was able to rebound a little. Going forward, we have the key unemployment number coming on Friday. I'm not saying that the dollar has necessarily reached its low for the week, but I sort of expect it to sort of remain in a range for something like the dollar yen. I think it would be the 102.50 level. We'd probably find buyers against that level and move up, maybe to the 104 level and before that key release on Friday.
Okay, Greg, you just touched on some of the themes that have been weighing on the dollar. Earlier and overnight, we got the monetary policy rate announcements from both the RBA and BOC, which was pretty interesting. The RBA hiked by 25 basis points, while the BOC cut by 50 basis points. But although they had a divergent monetary policy decision, we saw both the Aussie and CAD pull back. So in the coming sessions, if you could give us your outlook for the Aussie as well as the CAD.
Right. Well, like you said, the Aussie, both of them did pull back a little bit. Some of the oil was down and the commodities were down, so it had an effect. And a lot of times, the last time I think the Reserve Bank of Australia raised rates, we had the same sort of reaction where it's already priced into the market, and so it ends up coming down, retracing, and then moving back higher. Obviously, they're both of the economies are sort of one of them is grabbing onto the China situation and the strength of the exports and the growth that region is sort of experiencing, while as Canada is experiencing the opposite with the slowdown in the U.S. So they're being affected greatly by exports to the U.S. and the new chief, Carney, came in and lowered rates by 50 basis points. The GDP yesterday was much weaker than they expected, and so I think it was the right move. So, but we're seeing that we're seeing in the traded currencies how a lot of times the news is already discounted in the market, and sometimes what they say after the releases also have an effect. The Bank of Canada comments in particular were a little bit more forward-thinking, saying that we expect more eases and greater weakness to come going forward, and I think that was a signal to sell some of the Canada. So I think that's what we saw today in the markets.
Well, Greg, speaking of economic data, looking ahead to tomorrow's North American session, we do have a few U.S. data releases that will be closely watched, including the ADP report ahead of Friday's non-farm payroll. So let's take a look at euro-dollar. We also have the ECB rate decision on Thursday, and although euro-dollar was fairly range-bound in today's session, going forward, looking ahead of the ECB rate decision and NFP on Friday, what is your forecast for euro-dollar? Right.
Well, the euro-dollar, we certainly have heard a lot from the central bankers out of the ECB about how they're definitely concerned about inflation, and the CPI is still running above 3%. The target is 2%, and as long as that's the case, they're gonna not necessarily be as concerned with growth. Now, interestingly enough, their GDP came out for the fourth quarter today. And although the headline year-on-year number came in as expected, some of the pieces weren't so great. The household growth for the fourth quarter was minus 0.1. We saw government minus 0.1, and we saw investment in fixed capital investment by businesses plus 0.8, but that was down from 1.2. Those pieces seem to me that they're going to be all weaker going forward in the first quarter for the Euro GDP. So we're going to see slowdown in the growth in the ECB, and that's what they've been telling us as well. The European Union is that they're going to experience slower growth going ahead. Now, as far as the inflation front, on a year-on-year basis, if you look back, going back a year, there are some numbers that came out that in the coming months are going to be replaced by newer, hopefully smaller increases. I think there's like a 0.7 increase and a 0.6 increase, not next month, but the month after. That if they're replaced by something like 0.2 or 0.3, then you should see the year-on-year inflation rate come down in the European Union, and that would help the ECB in their monetary policy, especially in the light of perhaps you're going to see much slower growth going ahead. So it's not over for they talk about inflation, but I think there might be bright signs ahead. Now, saying that consumer prices, the producer price indexes are still high, and if some of that price increases as a result of higher energy and food start making their way into the consumer price index, which is the big wild card, then it's going to be still big problem over there, and they're probably going to keep their rates high. So as a result, we're seeing the euro-dollar strength. We saw it go above the 150 level. Now we're seeing it in between 150, 140, and 152.75. 75 is sort of the range. We'll see what happens on Friday, and in the U.S. And if the number is weak, we're going to see the euro strength to continue just because of those fundamentals from the central bankers.
Okay, Greg, you highlighted the concerns for the ECB, but also ahead of the decision for the ECB, we have the BoE rate decision coming out on Thursday morning. So if we could shift our focus over to cable against the U.S. currency, and what you expect to see from the central bank on Thursday.
We expect no change in policy this time, but the Bank of England has cut their rates a few times already, and we sort of expect them going forward to look for reasons, or they might probably have economic reasons to cut. Their housing is still a little bit iffy. They have the average price of a house over there is like $450,000 in U.S. equivalent, and if the credit markets and the tightening of the credit conditions and all start to weigh on their housing market, which it already has, then we're going to see slower growth from the consumer. It moves. The U.S. was a blueprint, unfortunately, for maybe some of the ills that other countries may have, especially where housing might be a concern and credit is a concern. The turmoil in the housing and turmoil in the credit markets are just extraordinary, and in my opinion, and some things that we haven't seen in the past, and it's a little bit too early to dismiss the effects of them, or to say that interest rate cuts here or anywhere are necessarily going to solve the problems. There's still a lot of houses for sale, and there's still a credit crunch that's going on that's causing issues for consumers, for businesses, for the economies in relation to where it was and the availability 6 months ago, a year ago, certainly.
Okay, Greg, last but not least, while we have you on the show tonight, investors remain jittery about all these concerns you mentioned, and adding to the sentiment in the market right now, Moody's today said they don't expect a recovery in the CDO market in 2008. And we also heard from the chief economist for the NAHB saying that we're seeing the deepest, most rapid downswing since the Great Depression. And these aren't heartening comments. But for FX traders in the market right now that we've covered all the majors, which trades do you think are a good opportunity?
Well, ask me on Friday. I definitely think that the Friday figure is going to be a very key release, as it always is. But it's particularly going to be of great interest this month. Over the last month, we've seen the initial claims and the continuing claims start to move up. And in my mind, I see like a 400 level in the initial claims as being the recessionary level. And we're at 360 or so as a 4-week moving average for the initial claims. And I go back to 2001 to look at what the claims figures were doing back then in 2001, and it was around the 400 level initial claims where you start having where they settle for a recession period. The unemployment rate is going to be key. That's the headline that businesses look at when they read their paper. They don't necessarily know about the non-farm payroll. But what happens generally when people start laying off workers and they start seeing the unemployment rate start to tick up, it generally gains a momentum. Why? Because they don't want to be the last businesses to cut people. If everything else is slowing, they don't want to be the fool that sits there with the workers on the payroll. It's just a natural reaction, and so you see it go from 5 to 5.3 to 5.6 to 5.8, and next thing you know we're at 6%. That's what happened in 2001 and other recessions, where you see that sort of unemployment begets unemployment. I don't want it to happen. It's the bright spot in the economy now, where 5% is okay. People are still working. We got to get through the problems that we have. But if it starts to, if the number ticks up and they're not expecting it, expecting a 5% unemployment rate and an addition of non-farm payroll workers, but if we see the number, the unemployment rate go up to 5.2 or 5.3, that's going to be starting to get attention in the press and businesses in general, and I think it's just going to start to snowball a little bit more with more negative press, and we don't need that. So what that will do to the dollar is hurt the dollar. It's going to hurt the dollar some more. We're going to see the euro move up through, certainly have 150 as a base and move up through the high levels. Sterling UK against the dollar may, it may not. It's probably going to lag behind. Again, dollar Swiss. There's going to be a flight to quality in Swiss franc. We're seeing dollar Swiss at all-time low levels. The 100 level, it would start to look like the vortex, where that's where it's going to go. It's going to, it'll have some magnetic field that sits there and drags it back down to the 100, and the same with dollar yen. We're going to see that sort of approach the 100 or 100 level in the dollar yen, and we'll see the weakness in that. In something like the crosses, we'll see the sterling yen and the euro yen, or the sterling yen, and probably take on the most heat on the downside, and things like sterling Swiss continue its descent. Euro sterling will probably go up just because that's the way it's been going lately, and what the fundamentals suggest in those currency pairs.
Okay, Greg, thank you very much for your insight and analysis, and we look forward to talking to you soon.
Thank you for having me.
Thank you. This has been your Forex News with Greg Michalowski from FXDD. Next up, we have your equities and commodities wrap-up for the day. U.S. stocks ended today's volatile session on a mixed note. The major indexes were able to recover from earlier weakness, with the Nasdaq and S&P 500 closing flat. Wall Street plunged into the red in morning trade as Merrill Lynch lowered its earnings prediction for Citigroup, and as Intel Core lowered its forecast for first quarter profit margins. Also, Bernanke's comments about more home foreclosures in the U.S. added to market jitters. There is a recovery on the heels of speculation that a bailout may be close for Ambac Financial Group. At the closing bell, the Dow Jones Industrial Average fell 45.10 points to close at 12,213.80. The tech-heavy Nasdaq added 1.68 points to close at 2,260.28. And the S&P 500 closed unchanged at 1326.75. In the fixed income market, U.S. long-term Treasury prices fell after Dallas Fed President Richard Fisher warned of inflation in the U.S. The benchmark 10-year Treasury note fell with its yield up at 3.58% from 3.55% late Monday. The 30-year long bond declined with its yield up at 4.49% from 4.43% late yesterday. And the 2-year note gained with its yield down at 1.6% from 1.64% the day before. In energy, NYMEX crude oil futures fell 2.9% to end below the $100 barrel mark. The market awaits tomorrow's EIA inventory data as well as the conclusion of the OPEC meeting. U.S. crude oil supplies are expected to report an 8th straight weekly increase. There's profit taking in today's session after prices had climbed to record highs in the previous session. Crude oil for April delivery fell $2.93 to end at $99.52 a barrel on the NYMEX. In other energy futures, April heating oil futures fell 4.9 cents to settle at $2.7918 a gallon. April gasoline futures fell 14.29 cents to end at $2.5291 a gallon. Meanwhile, nat gas futures added 0.7 cents to settle at $9.0353 per million BTU. Over in metals, gold futures saw a sharp decline as traders locked in gains. April gold fell $17.90 to end at $966.30 an ounce on the COMEX division of the NYMEX. In other metals, March silver fell from a 27-year high to end the session at $19.0738 an ounce. Meanwhile, March copper fell to close at $3.8270 a pound. This afternoon, we're joined by Derek Fry, head trader at ONF Futures and Options. He'll weigh in on NYMEX crude oil and gold futures.
Okay, recapping the action we saw in the metal and energy sectors today. Bottom line, I've been talking about this for the last few times I've been here on ETV Futures. The bottom line here is we're starting to see a good-sized pullback. If you look at the daily chart in crude oil in particular, you have a very nice reversal bar yesterday and follow-through, obviously, selling today that brought us, on the April contract at least, well below 100, and on the May contract to about 100. So looking pretty good here from the short side at least. We do expect and have been calling for crude to back off back into at least the mid-90s. Frankly, we're expecting to see at least 95 tested and more than likely even 90 tested as we move forward. There's obviously strong support lying right at 85, so we see that as a temporary support level as we push lower. But ultimately, what we're really looking for the next, frankly, probably going to end up being the next 2 or 3 months, is a trading range that's ultimately between 85 and 100, more or less. So look for some exciting range-bound trading to be ahead of us here as we move forward. Gold also saw a nice pullback. Basically, what we're looking for here, I mean, we've seen, successive CRB new highs in the CRB index for the last few weeks now, and it's clearly been an unsustainable run here, and we're starting to see some of that froth come out of the market, if you will. So look for some continued downside pressure. Beyond just this crude and gold here, we also saw soybeans limit down today. We saw basically the whole grain complex down, but soybeans leading the way, being limit down, and a number of commodities starting to back off of some of these meteoric levels that we've seen in recent days. So we're ultimately looking for a more broad-based pullback in the commodity sector. We're by no means trying to say that we're bears of the commodity sector. We're just no longer bulls for the short term. So look for, like I said, a broad-based pullback. Look for the dollar to find support here, even though there's really no support level here to be found. I think ultimately when we look back, we're going to see the recent breakout to new lows as a head fake, at least a temporary head fake. So ultimately, like I said, look for some stabilization in the dollar and pullback in commodities as a whole.
That was Derek Fry, head trader at ONF Futures and Options, with his commodities commentary. Join us tomorrow morning for a latest news update right here on ForexTV.com. Have a good night.